Hey, everybody, welcome to another edition of Market Talks with Dr. Stocks. It is Tuesday, the 13th of May, 2025, and I'm coming to you live from our live options room this time. We have two live trading rooms in Discord, and I jump back and forth between the two. In one, we do stocks, ETFs, and micro E minis. In the other, we do options. Options all day long. Mostly long calls, long puts, but we do some spreads and we do some covered calls every now and then. Okay, now, if you're interested in joining us, go to drstocks.com. We've been in business every market day since October of 2002, if you can believe it. Hence the gray in my beard here. And if you're interested in joining us in one of the live rooms, go to the subscribe menu, scroll down to the live trading room or the live options room. And if you subscribe to both, you'll get the second one at a nice discount. If you can't hang out with us during the trading day, you can go to Stock Pick Advisories and subscribe to one of our award-winning Stock Pick newsletters. We have two that are daily and one that is weekly. All right. Hope everyone's doing great. Let's get down and take a look at the market here. First, I wanted to show everybody in the live options room some software that I use. Let's get this looking there. Okay, some software that I use to monitor call flow, options flow, I should say, calls and puts throughout the trading day. And as you kind of can get a skill for this, if you look at the flow long enough, you start to see certain names keep repeating themselves. You see names that haven't shown up for several days. Suddenly everybody's interested in buying calls on that name or puts on that name. Sometimes you see a popular stock like a Tesla getting hit again and again and again at a certain strike price with a certain expiration, some big trades coming through. If you pay attention to this flow long enough, you'll start to see some patterns, and it actually gives you some very, very pertinent trading information. Why is that? Well, the guys that are able to buy $500,000 worth of calls on NVIDIA, for example, are very deep-pocketed traders, and they wouldn't be deep-pocketed traders if they didn't know what they were doing. So we can kind of follow in the footsteps of these, what we might call smart money traders, to see what they're interested in buying. That's one way we use the flow. And the other way we use the flow is to find names that maybe aren't that common, are not popularly traded, haven't been hitting or seeing this heavy volume coming through in the options side of things. And then suddenly they start showing up. I'll give you an example of that today, one that, in fact, we went long some calls on. Not only is the chart looking pretty good, but it got some very unusual call flow today. Now, what am I looking at here? This is Black Box Stocks. If you're interested in a free week trial to Black Box Stocks, let me know in the live options room, or if you're watching this on YouTube, send me an email, drstocks@drstocks.com. That's, by the way, DRSTOXX. That's Dr. Stocks. Send me an email and I'll shoot you that link to the free trial. So Black Box Stocks, they do not just options. You can also get some information on equities. You've got unusual price movements here, both up and down. They'll get registered here in this list. The list updates every few seconds. And then if I don't know what is on here that's of interest, I don't really know much of these names. This is SMCX is, I think, a leveraged fund for SMCI, if I'm not mistaken. And it triggered an alert here at 31.44. Current price is 34.73. That's a pretty good move in one day. That's a day trading sort of thing. And if you look over here, you're going to get a pretty good read on the balance between the bid and the ask. And when it starts to tick into the green, it's more bullish. It starts to tick into the red, more bearish. You can time your entry that way. It doesn't seem to be updating, but I think, oh, there it goes. Okay, so we're starting to lean a little bit bullish. Yeah, so if you're interested in that, if you want to trade fast-moving stocks, mostly day trades, you would be interested in the equity side of Black Box Stocks. I don't use that. I'm not a quick turn trader. I don't do a whole lot of day trading. I did day trade the micro E minis for the better part of a year, developing 4 trading systems, and we averaged trading a single contract on the S&P, the NASDAQ, the small caps, and so on. We averaged over $1,700 a month in net profits for 7 months in a row. And if you're interested in those 4 trading systems, you can go, this is a shameless plug, you can go to drstocks.com, click on the Learn to Trade menu, and you'll find the webinar there on day trading the E-minis. That's the one you want. All right, so I'm scrolling through. I'm scrolling through some of this feed, right? This call flow, and I tell you what, I've got a few filters on here. So I've got both stocks and ETFs toggled on. Puts and calls. I need to see both. Flow colors. Now this has to do with how fast the orders were coming through and relative to the open interest. And was it like one big block order, or was it a bunch of smaller orders coming in really fast? They get different colors based on that criteria. I just have them all on. I don't want to miss out on anything. I do have, this is important for me, at or above the ask. So I'm not interested in monitoring the flow of people that are selling puts, for example. That's a bullish position, but I don't really want to follow that. So I'm only interested in people that are buying calls and puts. Now, when you get a whole bunch of puts coming through at the ask, it's not necessarily a bearish position, because those people might be long shares of the stock and they're just adding a little bit of hedge protection. So you have to take the puts with a little bit of, you can't just follow that flow expecting to make a lot of money on if the stock falls down, because it may not fall down. But if you see a whole bunch of call flow, there's really only one reason to buy a call, and that is you expect some directional movement to the upside. So I've got at or above the ask, and I'm going to toggle on a minimum size of $50,000. If you don't have that on, you're going to get some like $15,000 size, a $20,000 size. I'm not interested in those smaller trades. 50,000 is typically where I start this. And if I start to see a whole bunch of flow above 100,000, then I'll toggle that off and go with 100. Let's just start with 50 and see where it goes. Now, down here you can do in the money puts. If you're looking for those that are going deep in the money, out of the money is more of a lotto position. People really have pretty high expectations of a directional movement if you're buying something out of the money. Weekly puts, weekly calls, if you're interested in that, more of a short-term trading look, et cetera, et cetera. Okay, let's save this. Now, here's what I was watching. Look at all this NVIDIA. Of course, you're going to see a lot with Apple, NVIDIA, Tesla, Qualcomm, Microsoft, Google. You're going to see those guys show up every few seconds. That can be helpful, but not necessarily, because you're going to see that every day. You're looking for something a bit unusual. So I started to see a number of pretty sizable trades coming in for a software name that I really like a lot, Upstart. And here they are. There are a lot of little ones as well, 13, 15, 18,000. Let's just weed those out. Here are some big blocks, right? 200, that's $250,000 for the June 13th call for Upstart at the strike price of 53. Here's another one, block, same expiration, same strike price, almost 100,000. Here's one guy going out a little further to the regular Friday of June, 55 strikes, so a little bit out of the money with a block of 75. Here's another 100K, right? So, and that one's way up there. This is interesting. January of next year at a strike of 90, which is a good 42 points above current price, guy bought 200 of those contracts. So Upstart doesn't get much like this. It does get a lot of the smaller trades. Let me show you what I mean by the smaller trades. If we toggle this off, see, there are a bunch of those little ones in there. So when you start to see these coming through, boom, 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 every few minutes, something's kind of going on with Upstart. So that then sends me to the chart, and we'll start with Upstart here. We'll go over to the charts, and we'll show you why I think all those people were buying calls. Why? Because it's in a pattern breakout Started yesterday. It's confirming today. And it's a very nice looking pattern, right? It's not perfectly formed because the headline or the neckline is slanted a little bit toward the right to the downside. You want to see that flat as much as possible, or even slanting a little bit to the upside. It's the only flaw in this pattern. Everything else looks very, very good. And what I really like about this pattern has to do with earnings. It had a huge um, accumulation of shares on a little bit of a dip on earnings. I don't know why it dipped down because that little green box tells me it was a beat, earnings beat. But if you just have one little word out of place during the conference call, or if you tighten up the range of your forward guidance, you can get knocked back pretty strongly the next day. And the good news is when you see an earnings drop like that, that fills in right away, like within a couple of days. It's exactly what this did. That's a very good bullish move. So lots going on in this chart that looks bullish. There are some bearish contingencies here as well. So we do have, where are my moving averages? Hold on, let me see. There's the 50 and there's my 200. Okay, I don't know why I had those off. It is a downtrending pattern, right? The LRC, the linear regression channel, is falling down right to left. The 50-period moving average is not looking so good. It's still falling. The price, at least until yesterday, was below the 200-period moving average, and that's not exactly where you want it to be for something like a longer-term swing trade. But some good things are going on as well. I mentioned the volume. I mentioned the pattern breakout. This is a bullish inverted head and shoulders. One of the most reliable patterns of all stock chart patterns. I don't do a whole lot with patterns, but I pay attention to inverted head and shoulders, cup and handles, both at the bottom of a downtrend and the top of an uptrend. The same with the inverted head and shoulders. And I pay attention to what I call high tight bases, something I learned from William O'Neill, where the stock is going up and up and up, and then it shifts sideways for 3 or 4 weeks inside a tight little range, right? With a clear set of lows at support, a clear set of highs at resistance, and it's coiling up inside that little pattern. It could be a rectangle, it could be more of a triangle. That's also very reliable as a potential breakout in return to the trend. Right? If it's a uptrend coming into that pattern, it'll be an uptrend on the breakout. So those are the three things I look for in terms of patterns. Of those, this one is the most statistically reliable. That is to say that breakouts tend to give you a very good profit potential, and hitting the pattern target is much more likely in this pattern than in the others. So, and I learned that, by the way, from someone who deserves a plug. That is Bulkowski. I don't know his first name, but his encyclopedia of chart patterns is worth having on your shelf. Doesn't make for exciting reading, but what he did was he took all the chart patterns from all the S&P 500 stocks going back 30 years or so, and he categorized them. He gave the type, he gave how many times did it break out, and then give you at least a 10% win. How many times did it hit the pattern target? How many times did it break out and fail, right? And then he ranks them by reliability or probability or return percentage. And this is one of the top ones. I don't think it's number one. Number one, I think, is the rectangle pattern at the top of an uptrend. But this is maybe number two, and it is a very reliable pattern. So we had the breakout yesterday. Today, a continuation, taking out yesterday's highs. That's a confirmation. We're hovering near the highs of the day. We're back above the 200-period moving average. And your target pattern for this, the pattern target for this, is in the low 70s. And here we are at 54. That's a big move, very big move, 50% move. And that's why I think we were seeing these guys plow into calls. We have one little guy on a small trade putting on some puts, but everybody else is putting on calls. And I have to say, for Upstart, this is a pretty significant investment by those people. Okay, so that's how we use option flow to help us find new trades. And it's not the only tool we use, of course. I usually use and rely more frequently on scanning tools, Market Surge of Investors Business Daily being my favorite, FinViz being a close number two. And I like to run those scans in about mid-morning and then again mid-afternoon, just to kind of get a feel for what is showing some outperformance, which stocks are crossing over moving averages, which stocks are showing outsized volume, that kind of thing. And that's where we generate most of our trades from. Now, let's say that you're interested in, I want to show you one more trick with that. Let's say you're interested in, I don't know, give me the name of a stock. Not one that's so, how about Hood? Okay, let's try Hood. Because I know Hood's moving today. We have the leveraged version ETF for Hood. It's Robin, ROBN, in our ETF trend letter today, along with Coin, the leveraged version of the ETF in the ETF letter, CONL, and both of those guys are way up today. So let's take a look at Hood. All right, so this is interesting, right? So Hood is making a bullish run. Here's your 5-minute chart for Hood. Here's your open, that dotted green line over there off to the left, and it's been up, 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 like the rest of the market. Up, 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 little bit of a handle here, and we're banging on new highs of the day in Hood. Now, you would think that with that kind of bullishness, in fact, let's take a quick look at the daily chart. Here's the daily chart. Yeah, see, this is another inverted head and shoulders. There's your left shoulder. Here's your head. Here's a small little right shoulder. That's exactly what you want to see. You want to see the right shoulder smaller in size than, smaller in depth than the left shoulder. And here's your nice little coil ahead of breakout, and then boom, 4 or 5 days, boom, 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 up, up, up. Now, you would think that you would just see a whole bunch of big calls. Let's do our filter. Oops, I didn't mean that. No, I don't want to download the data. How do I get back to, hold on, let's do this. Okay, let's put on 100,000. Let's just see who is interested in Hood in at least 6-figure size. All right, there's a lot here, right? If you scroll down, this is, you saw what Upstart was, and Upstart doesn't get a whole lot of call flow, and it certainly doesn't show up here every day, and it's doing pretty well today. A Hood gets a lot of call flow, and a Coin does as well. But you can see the big size, the big money players, $100,000 and up per trade, and a lot of these are going to be the same guy, right? 70 for 919, 70 for 919, 70 for 919, 200, 200, 200. That's the same guy, and he's putting over $500,000 into that trade, and we probably could find more of that same guy buying out there. Here's another one, 200, 70. He's going out a little further, or not quite as far, to August. Anyway, yeah, is this a bullish tape? Yes, absolutely. You can see it's like 8 or 9 calls to every put, and the size here is pretty darn good. Now let's do something even further. Let's go down to, let's try 500,000. Let's see which of the really big guys out there are interested in Hood, and they're all buying calls. Every single one of them buying calls. So here's 1.02 million. Here's 1.3 million. Here's 1.05 million. These are deep-pocketed traders, probably managing a fund of some kind, and they're very interested in buying some Hood. Now, if I was interested in buying, if I wanted to open up a position in Hood, I'm not going to, because I have it in one of my letters, and I try not to duplicate too much in these various services. But if I wanted to open up a position in Hood, call options starting today, I would go to this list right here. I would see what are the big guys, where are they putting the most money? Are they going just out for a month? Are they going out 3 months? Are they going out longer? Are they going up, ahead of price in the stock, out of the money on the strike? Are they going in the money on the strike? And if you see these, right, we've got August, July, June, July, September. Here's a little day trade. So we kind of set that one aside. Don't worry about one that's going to expire on Friday. June, August, and another short-term trade. So maybe, probably about July is if you kind of take an average of the time there. And then current price is at 61. And what are the strike prices? Pretty much at the money, right? 60, 60, 55, a little bit in, 65, a little bit out, 55, 55. The unusual ones here are the 75 calls and the 40 deep in the money calls. Those are the outliers. Most people are going right at the money or a little bit out of the money. So that's another way you can kind of figure out, what's the best option contract to buy. As a good rule of thumb, if you're swing trading an option, go out at least 2 months. Give yourself some time. Don't worry about time decay, and do something at or near the money. Right? If it's a $50 stock, try to find the $50 strike price. And don't go in the money unless you want to kind of trade the option as if you were trading shares but at a discount. You can do that. I don't have any problem with that. But I wouldn't go too far out of the money because you're really lowering your probability. You lower the probability of making a profit on that trade because the stock has to move pretty fast. Otherwise, you're going to really start to lose on the time decay. At the money, 2 months out for swing trades. And that's just a good rule of thumb to follow. Okie dokie. Let's take a look at some indexes. We like Hood. We're, Upstart. We're long calls in the live trading room because of that breakout. Let's see where it goes. All right. So Nasdaq. Sorry, the Dow Jones Industrials average is the weak link today, and it's not looking real good. But if you pull UNH, which has just been absolutely horrible for months now, and I've told both of the rooms, stay away from UNH for several months now. It's just a no-go zone. It got a big crack on earnings, and it just hasn't recovered. If you pull that out, the Dow Jones is not having that bad of a day, but technically speaking, we have to be ready here for a bit of a pause. Why? We're in a downtrend. We tagged the 200-period moving average yesterday. It couldn't get through today, and that's typically where you start to see things cool off a bit. We're also up into the blue zone. That's a 2.0 standard deviation of the linear regression channel, and it's a downtrending channel. And one of our mantras in the room is we sell short the blue in a downtrend. We buy long in the pink in an uptrend. And this is a downtrend, and it's in the blue. So, yeah, it's a short signal. Now, I'm not going to short the Dow Jones. I still think that it's probably more of a pause than a rollover. I just don't see the market rolling over with all the good news flow we've had out. We've had all the economic data. It's behind us. We have the FOMC behind us. We have all these big earnings behind us. And most of that was not, it didn't disturb the market much, right? Not all of it was perfect, but it didn't disturb the market. What has disturbed the market, and you can see it reflected in the late March swoon and then the big swoon in April, was the tariffs. And there was uncertainty. There was fear of massive inflation, fear of supply chain disruption, fear of empty shelves in the shopping mall. And very little of that is coming to pass. Why? Because Trump has done the right thing, in my opinion, by giving a 90-day pause and now starting to give concessions to China. And he's working out deals in probably the same sort of way with Europe. Still would like to hear more about Mexico and Canada, our two biggest trading partners. So when those guys start revealing what they're talking about, we'll really, so we've got a lot of positive catalysts now. We know more about China deal. Europe is in the works, and probably only going to be good news from Mexico and Canada. I just don't see the market going anywhere near those April lows. And if we get a rollover of some kind, it's probably more of a technical pullback just to test some levels of support. So the Dow is, 41,484 is where you have this little volume shelf right here that's going to act as support. Maybe it tags the 21 period moving average. Frankly, I'm not even sure it's going to do much of that. Not until we get um, uh, more of the tariffs coming out and the narrative beginning to take shape. All right, so that's that. The S&P 500 is just looking much better. UNH is in there, but it's not a big factor. It's not one of 30, it's one of 500, and it's just up and up and up. Now, if you look carefully, you kind of see a little pattern here, right? Left shoulder, head, little tiny right shoulder, and then big, booming, high volume breakout yesterday above the neckline, above the 200, above all the moving averages. And now we even have a 21 over 50 cross. The 50 is starting to curl a little bit higher. And we still have a downtrending LRC. That's a 100 period look back. And once these new prices here at the right edge get factored into the formula, and these prices that are, well, these prices that are a little lower, and especially these prices down here lower, when they start falling off, you're going to see that LRC uptrending again. That's just how it works. Also note, everybody in this area right here is accumulating shares. We don't have a distribution day in there at all. Maybe one right there on that second pullback bar. That was a little bit of a distribution, but pretty mild. And it's just in breakout mode. It is, in fact, what I call a blue sky breakout. Now, let me define what a blue sky breakout is. And I have a whole trading system that uses these parameters in my trend trading for a living book. Blue sky breakout, very bullish pattern. New 40-day high, price high, that's number one. Number two, moving averages doing what they're doing here, which is curling higher, and you've got price above them. And number three, you've got a new 40-day high in RSI, and you can substitute other indicators for that as well. MACD works pretty well as also, although it tends to be a little laggy, but RSI is clearly, this one down here, this is clearly showing a 40-day high, and price also is up above at least 2 months of trading action. So that's a blue sky breakout, and these are the kinds of breakouts that just tend to keep going higher. It's not that they can't consolidate, go sideways a little bit. They might come back and test some intraday levels of support. Nothing ever goes straight up, right? Except in a very unusual circumstances. But coming back down again, testing some of these low pivots down here. No, I don't see it. There's nothing in this chart that tells me we're going to have anything like this. Okay, I have a guy who does Elliott wave theory, and he's got a bullish scenario for the S&P and a bearish scenario for the S&P. And in both cases, he sees a pretty meaningful pullback from around this level. He didn't even see it going this high. He had 5,900 as his max on the current run, and we're up above that now. So he's already a little bit off. And I don't do Elliott wave theory, and I frankly don't think it's all that reliable. You know, you can make it look like it is following the pattern, 5 impulse waves up and 3 correction waves down, and then another new 5. But then the price does things that you didn't expect it to, and you've got to revise your counting system and do it all over again. To me, that's not a reliable trading system. Anyway, so it's already doing more than what he thought it was, but I should say he thought it would hit 5,900 and then pull right back down to about 5,500 for a meaningful pullback before we get a new set of impulse waves higher. I don't see that happening. I really don't. Not unless we get some sort of weird reversal on the tariffs. NASDAQ, up, 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 very much like the S&P 500. Both indexes are driven by the same 10 stocks at the top, all the big guys, they're weighted indexes. So they're both doing the same thing today for the same reason. Again, blue sky breakout, MACD, RSI, both confirming the breakout, both confirming the momentum. All this is good. All this is very good. Again, doesn't mean we're just going to go straight up from here and not have any down days. And we probably will get a few scary drops along the way. but mostly longs. Give them some room. And if you can, this is the worst part of my trading, hold on to the winners as long as the market will let you hold on to them. Small caps, of course, they're going to be the weakest because the tariffs, inflation, high rates, um, a fairly hawkish Fed, all of those are, all of those are reasons, all of those are reasons for um, the small caps underperforming. They're way, way, way below all-time highs, and they really haven't shown much strength in quite some time. Um, so that will change. That will change when we start to see rates come down, mortgage rates come down, lending rates come down. When we continue to see more of a growth-oriented economy, risk-on trading, and I think we're pretty close to that. I think that the small caps will uh, do very well probably in the second half of the year. We're just not quite there yet. Bitcoin is back up today after a nasty reversal bar yesterday, bearish engulfing candle, heavy volume. So we were long Bitcoin in the other room. We're long a call spread in this room, the live options room, and we're hanging on to that and thankful that it's back up again today. But yesterday it looked a little squirrely. The nice thing about the spread is that you've got both a bullish component and a bearish component. And so when things get a little iffy like they did yesterday, it's easier to hold on to it and sit through the drawdown than it is to if you were just in a long call. Long call, you're going to see a lot of your profits evaporate on a day like yesterday. And we were in the micro E mini in the other room, and we raised the stop up to intraday level of support, and it hit that stop on the way down, but it was a profit because we were in several days before. So it was a profit stop is what I call that. So we're making money on Bitcoin. We also have a long-term position in Bitcoin in the other room as well. But I think today's reversal, and it's an inside day bar, and volume is a little light, but it could just be a pause in the eventual rollover of Bitcoin to the downside. We'll have to be a little careful with this, but I like the fact that it is banging up on what would be all-time closing highs. We're not that far away. And when things get close to the all-time highs, they usually like to test it, if not break through. So we'll have to wait and see when it gets up there what it does. Oil is up big today on Saudi, not on Saudi news, on Iranian oil sanctions news, reducing production, increasing prices. Not exactly what we want to see on terms of inflation, but oil was due a good relief rally because it's been in a downtrending mode for quite some time. I do think oil is going to cool off here at the 50-period moving average. It's a former pivot high, and typically when you have a lower low on the downside, you get back up to that pivot high, and that's about all she wrote. So I think over the next couple of days, we'll probably see oil cool off a little bit, roll back over, and then maybe form a trading range of some kind. We are long gold in the other room, and we just went long today. It has come back in a 4-bar pullback to the former level of resistance, then support, then support, then support. Yesterday held very nicely. It wasn't a great day for gold, but we weren't in it at the time, fortunately, but it did hold. And now we've got an inside day bar in the pink zone of an uprising LRC. We're above the 50 nicely. The MAs are stacked, 21 on top of the 50, 50 on top of the 200. And the only thing I don't like about this chart is that there was a lot of distribution up here at the top, right? You've got this trading range, highs well established, lows well established, and inside of that range, more people are selling than buying. Now, that doesn't necessarily mean it's just going to crack from here and fall. It could, but it doesn't mean that. It simply means that there's a lot of maybe people are just pulling out of gold because they've had a nice run and they're putting money back into stocks. I don't know if that's the case. I've been reading a lot about a lot of money on the sidelines, right? So not everybody is plowing back into stocks. But technically speaking, and as a good hedge against inflation, and if oil is going back up, and if the dollar is starting to roll over, let's take a quick look at the dollar, because because that will impact gold directly. Yeah, that's what I thought. So huge up day yesterday, big gap up, very strong dollar. That's what hit gold so hard, along with other commodities. Couldn't couldn't get up above yesterday's high, and it's been all downhill ever since. And now we've got a gap to close there, and it's in a downtrend, and it tagged the 50 and reversed. This looks like the dollar's ready to start falling again. The dollar's had a horrible run, and I know this firsthand because we were just in Italy during the Easter week, and we had been in Italy at Christmas time last year, and the euro and the dollar were pretty much at parity. Now it's like 115 to 118, and so it was a very weak dollar, a very strong euro, and everything was a lot more expensive. Anyway, still cheaper than living in Italy is cheaper than living here in America. I have to say, even though it's a European country. Okay, yeah, this is what it's been doing. It's been coiling up sideways, giving the inflection of maybe rallying again, and then it breaks, and then it tests that level and it breaks, and then it tests the level and it breaks. It tests the level and it breaks. So I'm looking for another break to the downside. Let's get the dollar down below. That's good for stocks. That's good for gold. That should be good for bonds. We'll see. We will see. All right. All right. Let's skip the indexes for now. I did want to show you one thing. If you go to FinViz, you click on groups, and you go to, like, let's say the last month, right? Because the last month has been really good for this relief rally. A lot of technology, of course, is up there. Consumer cyclicals, that's Tesla. Industrials, a little surprising, but they're up near the top. Financials, doing well. Then you look down here at the bottom. What's not doing well? Healthcare, UNH, right? Healthcare. Consumer defensive stocks. We're in Philip Morris, and that may come back into favor if we get a little more volatility coming in. But they haven't had such a good month. We'll see if that reverses. Utilities are down there, basic materials, real estate. So all that's to say, not every sector of the economy is thriving right now. We need to see some of these guys down here at the bottom start to catch a decent bid. And they will. They will. Once we get past tariffs, once we get past inflation, once we get a little more leeway from the Fed on rates, we should be okay in those sectors. All right, back to charts real quick. I'm running out of time, but I want to take a quick look at the mags. We'll do these worst to best. Microsoft is down a little bit today. It was out with some news, but it's had a very nice run. Really massive jump up on earnings when everything else was pretty, minimal, consolidating at best. And it's just been all upside from there. So clearly the market thinks Microsoft has been undervalued. It's down here at 350, and the market says, no, you're not a $350 stock, you're a $450 stock. And it shot up really quick. Qualcomm is doing okay. We're long Qualcomm in the other room. It's consolidating today, but it had a nice gap up yesterday. CRM software play probably looks like it's going to roll over a little bit at the 200. I have to say, Google is not in very good shape here. It's downtrending. It's underneath a whole lot of resistance, when the QQQ itself is up above that level, right? We're up at 40-day highs, 40-plus day highs. Google's still underneath a whole lot of selling pressure, and if it gets up into like the 165 level, it's probably going to get hammered right back down again, just like it did on that big red stick day. It was, in fact, red this morning when everything else had gapped up. It was red. So, no, Google is not a safe space as far as I'm concerned. Apple has the potential of rolling over after it broke out of this rising wedge, bearish breakout to the downside on earnings. You don't want to see that. But then it's right back up with the whole tariff news and the China thing. But still, just like Google, we're still under these levels of resistance. A lot of support in there. When price gets back up, people that bought shares here, right? You got a lot of people buying shares in that area, buying shares over here in this area, and then immediately they're underwater. Oh man, I'm bag holding Apple. I'm 20% underwater, 10% underwater, uh, and now price is coming back up to where I bought it. Am I going to just hang on after sitting through weeks of drawdown? No, I'm going to dump those shares and move on to something else, and just you know give a sigh of relief that I was able to get out without a loss. That's why you get selling when you get back up to these levels of resistance where a lot of trading took place. That's called the volume shelf or supply or and so on. Let's see. Amazon had a big day yesterday, holding the highs again. This is looking really good for Amazon. Netflix was bad yesterday, better today. Now we'll see where that goes. We did not take out yesterday's low. So I have a trading system. If you go up to all-time highs and then gap down in a couple of days from there, once you take out the low of that day, it is a sell short signal. We're not there yet. Facebook up, up, up. Tesla, we're long Tesla in this room, and we have Tesla in our long-term portfolio in the other room. So this is very good news for all of our members. Gap up yesterday, held the gap, and it's been a gap and go all day today. In fact, it was, where is it now? It's 334. It was up close to 340 just a little bit ago. It's coming in a little bit, but man, that's a strong day, good volume. This is a 40-day blue sky breakout with confirming RSI. Just doesn't get any better than that, especially in this market. Avgo, pretty much the same thing. Nice big green stick. We're long Avgo in the other room, and we're also long NVIDIA in the other room, and it is a gap and go today. Beautiful, strong, bullish gap and go, blue sky breakout. All right, just a few stocks that are kind of on my watch list. Labu's not a trade today. It's not even anywhere near setting up. But the only thing I like about this is that it is printing a potential higher low that tends to end the downtrend, but only if it can take out the most recent pivot high, which is way up here at 62 something. So we're not there yet. I just am keeping an eye on it. XPEV is a Chinese auto parts maker, I think, but it's got some very good growth, good fundamentals. And we're long China in the options room. We've got calls on yen, which was way up yesterday, giving a little bit of that back today. But in general, there are some nice looking China plays. And of course, they've all been waiting for the tariff thing to get settled. Now that it is starting to settle, we should see Chinese names do really well, should outperform. UPS, well, it had some bad news last night, unfortunately. I did like the setup yesterday, and this is a setup that is not one of my own, but it's from a friend of mine. He makes a good living from the market. He uses options only, and his trading system is a little complex, but the gist of it is this. You look for an RSI drop below 40, right? Here's the 40 level right there. It's a midline, 50. The 40 is the line just below it. You look for an RSI drop below 40, coupled with a crossover MACD with rising signal line, right? So MACD has to be going up, which is, it's kind of like a bullish divergence setup, right? You've got RSI that's down low, and you've got MACD that's starting to rise higher. And when you have those two together, you've got with some other things. That's just the gist of it. He's got some other stuff, volume, and he has a mathematical formula that he works out to find the best ones. But anyway, UPS hit his signal, buy signal yesterday on this breakout move, and it's not following through today, but it did get some bad news. So maybe if it can digest that a bit, close that gap, and maybe it's back off. Here's a gold. This is your 3X ETF fund for the price of gold. It's the best way to trade gold if you don't do the futures. And I like that setup. I still like the setup, right? You green bar, pink zone, pullback, uptrend, stacked MAs, all is good. Just that the volume is a little bit iffy. Starbucks, another signal from my friend's thing. So 40 MACD back here, rising crossover of the MACD, rising signal line. This was your buy signal right about, I guess, on that green bar right there. And it's up a good 5 points from there. That's pretty good move for Starbucks, right? Starbucks has been in the dumps for a long time. Their EPS shares just going down, 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 down. Sooner or later, with a big conglomerate like that, they're going to have to turn things around. They will. This is maybe a very good place to add some Starbucks. I'm not a big fan, but maybe some longer term calls. Go out to January, buy the 90 strike, and see where they go. BE, I don't know this one. TNA is a small cap index. CAVA reports earnings tonight. I think they're going to blow it out of the park. They've been having some trouble lately. It was way up at all-time highs and just kept going higher. We were trading it a lot in the live trading room because it was moving so nicely. And then they just started having some trouble and missing earnings, and down it comes. But a friend of mine who does some research in restaurant stocks and companies is expecting CAVA to do really well on earnings. I'm not going to trade it, but we'll see where it goes. We're long Tesla, we're long Uber in the other room, and it's just been up, 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 up. My goodness, just boomage all over the place. Here's another Chinese play, PDD. Avgo we looked at already. PLTR is, wow, all-time highs today. I'm kicking myself because I had it on my watch list when it pulled back down here into the 21 period moving average and gave a nice little reversal bar the next day, decent volume. And I thought, okay, well, at the open on the following day, if we see some strength, we will get long some calls. Well, I got occupied with other things, right? There's 20 stocks I'm probably looking at the same time, and you just can't focus on all of them at the same time. So we missed that entry in PLTR, but we'll keep an eye on it. When stocks get to all-time highs on good volume, and they're starting to see a little bit of bearish divergence in both of the indicators, it'll probably cool off a little bit from here. Could be a bull trap for a few days, but keep an eye on it. New all-time highs tend to lead to new all-time highs. But I think you're going to see a little cooling off just based on what I'm seeing there in the momentum. We saw that one already. This is the semiconductor index, which is a great way of trading all the, NVIDIA, Avgo, Qualcomm, and the rest. And we are long in the live options room. We have some calls on this sector, and so far so good. Bonds. So let's take a look at bonds now. We have some calls on in TLT in the room, and they're not doing very well at all. In fact, almost stopped out, and then I removed the stop. Why? Because I am starting to see this line of support right here, which was support here and support here, and pretty close to support not too long ago. A place where we should see bonds catch a bid. I'm also encouraged with bonds by the fact that gold is now starting to reverse and go higher. And if that falls through, then bonds will probably not do very well either. And the dollar is reversing as we saw. So the dollar's coming down, gold's going up. We should see bonds catch a bid. And man, the yields are just so overbought to a place where I don't think it really can be supported. SOFI, I like this breakout. It's an inverted head and shoulders, very strong pattern. This target is up here around 18. I don't know. I'm forgetting if I don't think we got into SOFI in the other room. So maybe we can add some calls here before the day is done. Zillow is, why do I have Zillow on here? I don't remember. Anyway, I guess a little breakout there. Hood we saw already. Looks great. Mara, I wouldn't buy Mara, but I'm always interested. Coin is just way up there because it got put into the S&P 500. So we'll look at maybe some knock-on effect from some of these other miners. All right, guys, I'm going to have to let you go. Sorry I couldn't get to Felipe, we removed the stop. Yeah, we removed the stop on TLT. Sorry I couldn't get to your chart requests, but I'm going to have to get out of here, and we've got an hour of trading left. Let's make the most of it. God bless everybody. See you soon. Bye for now.